Good morning, I'm Bea Rose Santiago, sitting in for Mike Ureta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and insights you need to adopt, navigate, and lead. Let's dive right in. Marcos calls for unity, discipline, and Bagong Pilipinas in 2026. DBCC says the Philippine economy targets 6 to 7% growth this year. Analysts predict BSP may cut key rate as inflation slows. And the government rolls out 2.81 trillion peso PPP project pipeline for 2026. As Filipinos welcome 2026, President Ferdinand Marcos Jr. calls for discipline, unity, and a commitment to national progress. In his New Year message, Marcos says this is a time to reflect, learn from the past challenges, and move forward with hope. He urges Filipinos to act with shared responsibility, working together to shape the country's future through collective will and not just circumstance. Experts note that calls for unity and resilience can boost consumer confidence and social cohesion, key drivers for economic momentum as the year begins. The economy starts 2026 at a critical juncture. Growth targets are high, but confidence is fragile. The Development Budget Coordination Committee raises its growth goal to 6 to 7%, up from 5.5 to 6.5% last year. But third quarter GDP falls to 4%, a four-year low, missing expectations. Economists say public confidence sinks after flood control corruption scandal. The Development Budget Coordination Committee will review targets as the slowdown looms. Finance Secretary Frederick Go focuses on fiscal discipline and high-return projects. Some analysts support this, but others warn discipline alone won't be enough without stronger productivity. The Philippine Institute for Development Studies sees 5.3% growth, but underspending, weak confidence, external shocks, or climate risk could pull it lower. 2026 will hinge on confidence governance reforms, remittances, consumption, tourism, BPOs, and investment flows could undermine whether the economy rebounds or stalls. The country aims for strong growth, but an anti-corruption drive could slow it through 2028. Analysts say political fallout is undermining the government's ability to push reforms that boost expansion. The International Monetary Fund expects the economy to grow 5.4% in 2025, rising to 5.8% in 2026, 6.1% in 2027, and easing to 6% in 2028. This tracks the economy's estimated 6% growth potential, but weak investor and business confidence undermines momentum. GDP expands just 4% in the third quarter of 2025, the slowest pace in over 4 years. The Bangko Sentral ng Pilipinas cut its benchmark rate to 4.5% to offset the drag. Private consumption, typically 70% of output, grew just 4.1%, also the slowest in 4 years. Economists say public spending needs reforms to restore government credibility, including corruption prosecutions and legislative overhauls, or risk remaining temporary mitigants. Failing to act could mean slower growth, weaker investor confidence, and temporary solutions that will fall short to long-term recovery. Under the ASEAN economic community, the Philippines promises a greener future, but investment is not keeping pace. The Philippine Institute for Development Studies says the country must scale up energy investments to meet rising ASEAN sustainability standards and long-term demand. In its ASEAN Economic Community Report, PIDS says renewable energy investments total about $20 billion over the past 2 decades, a steady but moderated pace. That lags regional peers, with Vietnam alone recording $32 billion in clean energy spending in 2023. PIDS urges the PPP Center and the Board of Investments to create a unified sustainability scorecard to track ESG performance and climate risk. Renewable energy now accounts for about 32% of the total energy mix, nearing the 35% target by 2030. This highlights the need for faster, clean energy investments to stay competitive, reduce emissions, and meet ASEAN sustainability goals. In 2026, the development of public works and highways will no longer face local oversight. Now even satellites are checking its work. Congress has ratified 529.6 billion peso DPWH budget that mandates aerial verification on flood control projects. The Philippine Space Agency, or PhilSA, is authorized to monitor and validate projects using satellite imagery and other remote sensing tools. DPWH and PhilSA will also collaborate on AI-assisted flood mapping systems, sharing geospatial and remote sensing data to improve planning and oversight. Budget reform advocates say this shift ensures flood control spending is science-based, not parochial or driven by patronage. Enhanced monitoring is expected to boost confidence in infrastructure spending and project execution throughout 2026. Minimum wage rise in northern Mindanao, and the real winners could be the country's economy. The National Wage and Productivity Commission affirms an increase of 39 pesos in wages for both non-agricultural and agricultural sectors. The increase comes with two tranches, 25 pesos on January 16 and 14 pesos on May 1. Domestic workers or kasambahays will also get a 500 peso monthly boost, bringing the minimum to 6,500 pesos. Dolly reports that over 4.5 million private sector minimum wage earners and 755,000 domestic workers benefited from wage orders in 2025. An additional 8 million full-time workers above the minimum would gain indirectly in 2026 as enterprises adjust pay and correct wage distortions. The hike reflects ongoing efforts to keep pay in line with costs and regional living standards. It also signals stronger consumer spending, potentially boosting the Philippines' economic activity next year. The Bangko Sentral ng Pilipinas is considering cutting rates, aiming to give flagging economy a much-needed jolt. Analysts forecast a possible 0.25 percentage point reduction early this year, with a total drop to around 4% by the end of 2026. The BSP's decision will be guarded by stable inflation, economic growth, and the peso's performance. Experts say the move could help balance growth with price stability, though volatility and external risks may slow the process. This could mean cheaper loans, more investment, and support for economic activity, giving businesses and consumers some breathing room. The Philippines is ramping up public-private partnerships, and pipeline size might surprise you. The PPP Center says 251 projects are now in the pipeline, worth a combined 2.81 trillion pesos, nearly double the 127 projects from December 2024. 124 projects were approved in 2025 during the first full year of implementing the PPP Code of Philippines. Of total 166 projects are national, 85 local, with 194 solicited and 57 unsolicited. Contracts for 13 projects were awarded in 2025, including the National Single Window Integrated Trade Facilitation Platform, the first fully processed under the PPP Code. Other projects cover transport, water traffic, health, and non-traditional sectors like ICT, energy, and property development, among others. The PPP Center tracks performance and risks with public access via the PPP dashboard, which has logged over 4,700 views since April 2025. At home, this signals faster infrastructure delivery, increased private sector participation, and a more transparent approach to public projects. The IT BPM industry just proved that smaller economies can outpace the giants. In 2025, export revenues hit $40 billion, surpassing global growth expectations. Revenue climbed 5% while jobs rose 4%, showing the sector's resilience against global economic headwinds. This growth is powered by a boom in global capacity centers and strategic government policies. Analysts say the industry will remain a key driver of the economy, keeping the Philippines at the center of global services well into 2026. This means more high-quality jobs, stronger export earnings, and a growing reputation as a global hub for business services. As we enter a new year, Philippines, the community, is looking ahead to growth, risks, and the decisions that will shape 2026. After a year of volatility, governance, questions, and a slower economic patch, the focus now shifts to execution, confidence, and where opportunities will emerge next. Today on Business 360, we bring you an interview with Jonathan Ravilas, Senior Advisor at Reyes Tacandong and Company, on the outlook for 2026, what people are watching, and what it will take for the Philippines to move forward. Given the sustained low inflation of 1.6% in 2025, how realistic is it that this trend can continue without stifling investment or wage growth?
Okay, I think on the short term, we could probably see inflation stabilizing at probably still below the 2%. But moving forward, over the medium term, I think that it will be a challenge, especially with a lot of global issues like El Nino, and then, of course, climate hazards, and, of course, oil spikes, which are probably generated through geopolitical risk. So, most likely in 2026, we will see that inflation would probably rise above 2%, probably towards 2.3% for the full year 2026.
Let's talk about the rice. With rice prices falling to 20 pesos per kilo under government intervention, could this risk creating market distortions or dependency among farmers?
Okay, that 20 pesos is selected area. So it's not probably nationwide, but it's actually a good push. So sustaining the low prices is going to be a challenge. Again, what we're seeing really is more of two-prong. We have monetary policy, meaning the BSP slowly bringing down interest rates to help support business. And at the same time, we have non-monetary measures done by government. So one of them is, of course, the Rice Tarification Act. And then, of course, some interventions to eventually support food productivity. So it's working, but the question is it sustainable? So the challenge really is we continue to keep investing in agricultural facilities and support in the making sure our farmers are able to improve productivity over time.
How significant is the role of government-led price stabilization in driving consumer confidence versus the underlying private sector dynamics?
Okay, I think what we saw, the intervention that we saw was really coming from a high in 2022, where inflation was almost 6%. So eventually there was a real need to eventually do two things. One, create the necessary infrastructure to be able to bring down prices. So it's a two-pronged strategy. So one was these interventions that they've done. The other is to help the farmers. So as long as we continue this two-way of trying to ensure that we can keep rice prices, we could probably still see a very conducive local market. Why am I saying this? Because effective in 2026, we're slowly raising the tariff on rice from 15 to around 20%, if I'm not mistaken. So this actually will balance the productivity that we're seeing locally on better harvests, and that will mean lesser import. So that is actually a good sign that our what I call a bibingka strategy is working. Bibingka strategy is there's a fire on top and there's something that fire under. So we're doing it two-pronged.
Yes. Mr. Jonas, the bottom 30% of income households saw a negative 0.2% inflation rate in November. Does this indicate deflation pressures that could affect economic growth?
Well, basically, I guess one of them is that it's really more of the high base compared to the prices last year. Rice prices were significantly much lower, but also it could also mean that the challenges brought about by floodgate and the rising unemployment also brought down people to not really spend. And this is something that what the BSP has already highlighted in their business and consumer survey, that there is a divergence. Meaning, consumer sentiment is positive because of the low inflation, but because of the trust issues in government, business climate is has soured.
How credible are growth projections of 5 to 5.1% given global uncertainties such as the inflation abroad, supply chain risk, or the geopolitical tensions happening right now?
Okay, the 5 to 5.1% truly reflects the concerns of what happened in Floodgate. So prior to Floodgate in July, most of the forecasts are between 5.5 to around 6%. And my adjusted forecast for next year is still a bit optimistic at 5.3%. Hopefully that the government will ensure that the trust issues will be addressed. Primarily, this is transparency and accountability, and eventually ensuring that government spending is well tracked and everyone is accountable for it. So hopefully the 2026 budget is a much better prepared than what we saw from 2025.
Let's go back to the BSP. With the BSP having more policy space to adjust interest rates, could lowering rates too aggressively fuel asset bubbles rather than real household consumptions?
Well, rest assured that there are no asset bubbles. The market prices today are practically a bit lower. Again, there are many factors that have brought down prices. The other thing that the rate cuts that everyone is looking at is to eventually help restart the economy, especially after hitting a 4% GDP growth in the third quarter. This is something that we haven't seen since second quarter of 2023. But if we look at it from a longer term period, this was the lowest since 2011. So bringing down interest rate is something as a sort of appetizer for investors to start investing again. You have to understand that the situation of floodgate is like a person having a toothache, and it's very difficult to eat, especially during the holiday if you have a toothache. So, addressing the key issues of the toothache, which is transparency and accountability, will ensure hopefully your appetite will be back. And bringing down interest rate could be a very good appetizer.
But how sustainable is the current economic performance if it relies heavily on government intervention and targeted support programs?
Okay, that's a very good question. You have to understand that the Philippine economy is 70% driven by consumer spending. And as long as everybody spends, we have a good indicator, which is consumer confidence, which is already signaling that they're willing to start spending again now that inflation is well controlled. The problem is the business sentiment. People are hesitant to spend because the business climate is not there. But once people and consumers confidence is very important because especially for households, once they start feeling comfortable to spend, that is actually a very good signal for business to further expand. But one of the other indicators that business look at is the beginnings of government spending, particularly in infrastructure, so that there is a slight push in the economy that will accelerate business sentiment. And that's what was absent in the third quarter of 2025.
While the Philippines outperforms most advanced economies and other Asian peers, are they structural weaknesses in the economy like reliance or remittances or limited manufacturing that could undermine this growth in the medium term?
Okay, so you have to understand if we look at where our revenues come from, one of them is OFW remittances, and they're really being threatened by some of the policies of the U.S., which limits undocumented people to send money. If they send money, they will be sort of tariffied, meaning there'll be a fee that they need to pay. So that threatens our remittances. We're just happy that electronic exports was able to uh, get that zero tariff, and that will help boost. But again, competitiveness is another issue. The third is the BPO sector, which continues to remain buoyant, but there are risks on the part of uh, companies, American companies that have are if there is that bill that is being passed, could eventually bring the BPOs back to the US, and that is a risk. We've seen recently JP Morgan and
Yes.
Amazon cutting people globally.
Yes.
And this is, again, an effect of AI. So there are a lot of risks aside from domestic that could really affect. And that's the reason why most of the forecasts are in the low fives. If we were able to see strong consumption, improved business sentiment, then that could rise to 5.5 to close to 6%.
Another question. President Marcos's trust rating declined in November as VP Sara Duterte's rating improved. What are your thoughts on this?
Oh well, basically, I think one of the most important things to consider is that the people are waiting for the president to really deliver the bacon. No? Meaning, somebody needs to be accountable for all of these floodgate issues, and that is what everyone is trying to uh, wait. And until such time the president delivers that, his trust rating will remain on the lows. And of course, he needs to be able to recover from this by doing, again, accountability and transparency. He has already created steps to ensure that the trust restoration is in progress. The question is, we all want somebody to get jailed. So this is eventually what's keeping his ratings down. But if we were to look at on other fronts like inflation, then the president actually has a very good something to brag about because he was able to bring down inflation over the last 3 years.
Before I let you go, Mr. Jonas, what is your economic outlook for the first quarter and the rest of the 2026?
Okay, I think for 2026, we're currently looking at around 5.3%. Uh, we are hopeful that we'll probably be back to over 5% in the first quarter. Again, this is something that's quite hopeful. Hopefully, that the government will eventually bring back the spending that is much needed to be able to uh, restart the economy. But again, you can lead the horse to the water, but you can't force it to drink. So, what we're expecting probably the BSP to cut policy rates. We're seeing the government doing all the necessary intervention, but the problem is it's really all about the trust issues. But once these trust issues are there, definitely we could see something better. What are those signs? If we get to see public private investments, private companies, especially those that are listed, being able to do infrastructure projects, then that is a show of confidence in the Philippine economy. And that's what we need to look for in the first quarter of 2026.
As 2026 begins, one thing is clear: confidence will be earned through execution, credibility, and consistent policy. From all of us here at Business 360, thank you for joining us as we start a new year focused on conversations that matter for business markets and the Philippine economy. We'll be back with sharper questions, deeper analysis, and a front row view of the decisions that will shape 2026. I'm Bea Rose Santiago, sitting in for Mikey Ureta. Happy New Year and welcome to 2026. Keep it here on BNC, the Bilyonaryo News Channel.